Welcome back to the channel, everybody. I am Mick Alphanine. So there's been a lot of blood in the markets. Things have been dropping, but I think people on this channel should have already known that that was going to come. We've been discussing rate hikes. So the rate hikes were no surprise. I've been saying they can't take their foot off the gas since last year, right? Correct? All right. So I made that well known that that's how I felt. And now what has the Fed been saying? Yeah, we're going to raise hikes more. It just makes perfect sense because as soon as they take their foot off the gas, inflation will go back up. It did. And we didn't just guess that. We went by the historical data, right? So we already knew that, but that's just one piece to the puzzle. What people are not discussing, and we've been talking about for months, and I said this was coming, number one is liquidity drain. So along with the Feds raising rates, that's the most obvious part, is where is that money going to go to? Because people are still going to want to make money. They're going to go into T-bills and bonds, right? And bonds been doing terrible. So then what do? You raise that yield. So people are going to say, well, we're selling off the bonds. Yeah, they're selling off the bonds. This is what happens. You go to sell those bonds, right? You're looking this way. Then all of a sudden, they increase the yield on those bonds. Now you got to go. You want to go back to those bonds to get that disgusting yield, right? That where you're going to make some capital that's as close to a guarantee as possible. But where is that capital going to come from? This is what I was saying, especially with T-bills. Where's that capital going to come from? They have to pull. A lot of individuals and entities are going to pull capital from risk assets. It just makes perfect sense. I mean, correct me if I'm wrong. Let me know in the comment section. But I want to cover this first so people have an understanding, at least from my understanding. Maybe I'm wrong. You tell me differently in the comment section. But people have an understanding as to why things are happening. They understand why. Then they can gauge for themselves as they look at the markets, like how long will this last? They know where to look. T-bills, bonds, interest rate hikes, all of that stuff is connected. So they're going to pull liquidity from risky assets, crypto, stocks. Listen, even though crypto has been hurt, there's been so many articles written the last few days about how this is going to impact stocks and such like that. There's a lot of liquidity is going to get pulled from there as well. I'm not sure what's going on with the stock market at this particular time, but that's going to go into treasuries. It's going to go into bonds. It's going to go into T-bills. Things like that, anyway, I'm going to let them tell you themselves. All right. This is from baynews9.com stock market today. Then we'll get into some crypto news. You can skip these chapters if you want, but I think it's very important to have this understanding, or else you won't know why things are happening. Baynews9.com is titled Stock Market Today. Wall Street begins to bounce back after slow start to week. So it says, Wall Street pointed modestly higher before the opening bell Thursday after 2 straight days of losses, with the U.S. economy appearing to chug along despite the odds that the Federal Reserve is not done raising interest hikes. They're not. They can't be. And why would you want them to be? You saw what happened. They took their foot off the gas and inflation went back up. And that's considering they negate a lot of data to get the numbers to look a way that they want them to look. It says futures for the S&P 500 rose 0.2% before the bell on Thursday. It says minutes from the Fed's latest meeting released on Wednesday suggested that board members are unsure of their next. Well, they're very sure. They're very sure, unless they want trouble. They're pretty sure. I'm sure they're going to sound unsure, but I'm sure that they're sure. That's the most uneloquent way to say that. Say that possible. I know. It says inflation has slowed. Say this significantly. Right. Well, watch this contradiction. Inflation has slowed significantly since the central bank started its rate raising campaign a year and a half ago. I guess there's all price gouging people are feeling out there, right? Maybe. But with consumer prices up 3.2%. Oh, consumer prices are up. Here's the problem with that. I have an article somewhere in here to back up what I was saying the other day. When I told everyone, I said, listen, the people are running out of money. They're running out of capital. They're running out of the monies. And I have an article to prove that their savings accounts are at all-time lows. Hey, I'm telling you, watch out now. It says 3.2% year over year is still higher than the Fed's target of 2%. You're not saying how it went down and then it went back up. See, it is very deceptive. No. Very deceptive. Yeah. Be honest now with these articles now. It says, despite the furious pace of rate hikes, the labor market is robust and Americans remain the economic engine for the U.S., as they continue to spend. And see how they said that right there? You see that? They need people to lose their jobs more, even though they've been losing jobs at a massive rate, although that's not being discussed a lot. But they're still saying it's too much. I mean, I think they're delusional. I really do. I don't think they really know what's going on the ground. People working 2, 3 part-time jobs, full-time job plus 2 part-time jobs. They're going nuts out there with jobs. Some of these jobs are those gig jobs and stuff. It's not the same as a regular part-time job. It's not the same as regular full-time work, but they're counting it as that because it makes them look good. The government, I mean, there's a problem on the horizon. That's what I was trying to say in the other video yesterday. I'm just pointing it out so people understand what's going on. Now, is that great for the new financial system? That's fantastic for the new financial system. People are going to struggle, but anybody who's invested in the new financial system, it looks great for them. Anybody invested in commodities, if everything goes according to plan, it looks looking great. Not financial advice. I'm not a financial advisor. I'm just my thoughts. I'm reading, covering the articles, but I just want to put this out there, right? So I want to skip to this next article here. I don't want to spend too much time on that. All right. I have so many thoughts. My apologies. Sometimes I spend a little extra time on the articles, but I'm trying to give you as much as I can. So now this article here is from livemint.com. It says stock market news. U.S. Treasury yields widen as Fed minutes raise rate hike worries. But why did they widen? You see that sell-off that was going on? Right. You got to follow all this financial news. Unfortunately, right now, everything's connected. Crypto is connected to all of these different markets because there's only so much capital to play with. It says U.S. Treasury yields widen further on Thursday as the Federal Reserve's July meeting minutes have increased expectations of another possible rate hike. But what does that mean, right? That means that people are being given a safe haven by a federal government that is causing the problem. So they're starting a fire in your house and telling you, hey, go into this house if you want to be safe. You can stay in that house, but it's going to burn down. That's pretty much what it is, right? So they're going to chase people away from risk assets. As the yield on 10-year Treasury surged at 4.29% from 4.27% late Wednesday. You see what I'm saying? Why? You see? Because that sell-off was going on. The 30-year Treasury yield jumped as much as 7 basis points to that's mind-blowing, to 4.42%, slightly above last year's high. Why? Because they want people to come back. They don't want you to leave those. They need you to buy those bonds and T-bills. They need you there. So they're making it delicious. But where's that capital going to come from? Did you see the red? Okay, all right. Says the minutes showed that the Fed has likely not finished raising interest rates. They reiterate that from the last article. That's not important to me. It says in the July meeting, policymakers on FOMC unanimously agreed to raise the benchmark overnight interest rate to 5.25% to 5.550% range. Let's skip that piece there. They're going over all that stuff there. U.S. stock markets were mixed in early trading on Thursday. The Dow Jones Industrial Average rose 0.27%. That stuff we're not interested, but I'm telling you what, just keep an eye on all that going on. All right. Now let's move on to the crypto news. But I want to get that out of the way. I know people are going to ask. I know you guys might not see it, but I definitely do. Across a multitude of videos, people will be asking, hey, what's going on with the market? What do you think? And, they want to hear, I guess they want to hear my opinion on it. So yeah, I'm just putting it out there. That's all, in all humility. So this article here is from the cryptobasic.com. Let's get back to this good Bankcoin news because it keeps rolling in. It's just a matter if you're looking. The cryptobasic.com, the article was titled Ripple Restates XRP Role as a bridge currency to fiat and on-demand liquidity after regulatory clarity. Now I'm skipping a lot of this article. Let's go down to the section titled XRP in on-demand liquidity. It says the firm noted the role of XRP in addressing the harrowing challenges corporate businesses, look at who they're going after, corporate businesses face concerning intercontinental transactions. Why are they saying that? See, I've been saying this. There's no way around the multipolar world. You cannot only deploy a Western-based system, even if they wanted to, because the BRICS nations are going to reject it. These countries are going to have to meet in the middle with their infrastructures. right? That keeps everything fair across the board. At least that's where it seems things are moving. This is what they're demanding. We just have, I mean, how it shakes out, who knows? We just can go by what they're establishing right now, what they're saying right now. That's what I'm going by. Factual information. You have to have something neutral in the middle. And that's where you get your Stellars involved, your Ripples involved, your Algorands involved. This is their bread and butter. Intercontinental, they specified. Let's keep going. According to the statement, institutions using Ripple's on-demand liquidity product leverage XRP as a bridge asset for diverse government-backed money pairs. However, the U.S. regulatory environment haunted XRP for its role in this course. Now, keep in mind, once again, a lot of these countries are moving, not just towards this. I mean, a lot of people focus just on the BRICS currency, and that's, yes, we definitely should keep abreast of that. But once again, a lot of these countries are going to be rolling out digital currencies for their local currencies. They're going heavy digitizing local currencies, and they will be in heavier use than now. They want them to play a more significant role in how they function as countries. So that also is going to be significant. We have a lot of wiggle room. We have a lot of new partnerships we can make. There's still a lot of work to go for one company or a myriad, just a handful of Bankcoin companies. There's not enough to go around for all of the different tokenization that's going on. There's just not. And if they can pull off what they're attempting to do, boom. I mean, it'll be mind blowing, but we'll see. Time will tell. Time will tell. All right. It says, nonetheless, it is worth mentioning that the Ripple sale of XRP to institutions still a matter of debate. Like, they like to throw this negativity in there. Let the lawyers handle that. As of right now, XRP itself, not a security. Let's walk on with that. Meanwhile, the XRP community no longer sees that point as a significant hurdle. And I agree with that. Thank you. Appreciate you saying that. Bill Morgan, pro XRP attorney, reacted to Ripple's recent tweet to shed light on the pending case. Morgan highlighted that institutions using Ripple on-demand liquidity after buying XRP did so for bridge currency transactions and related commercial reasons. The lawyer noted that institutions could not have acquired XRP solely for the value of XRP to appreciate. Debatable. Says, but I'll take it. I'll take whatever moves us forward. I'll take it. The lawyer ultimately believes Ripple will successfully appeal the pending court case. I agree with that. Let's move on to the next article here. All right. I'm trying to get you as much as I can in a timely manner. There's so much good news here. There's a lot of interesting news. I'll say that. This also is from the cryptobasic.com. They continue to cook over there. Make sure you support them. I'm skipping a lot of stuff here. This article is titled, Whales Begin Large XRP Transactions as XRP Falls to Crucial Support Levels. Let's find out what's going on here. It says XRP has continued to drop to vital support levels, but this decline has attracted whale investors who have taken to accumulating more tokens. I knew that was going to happen. Even I was looking like, I have enough, but, and not just at XRP. Let me make that clear. I was looking at, listen, I feel like I have enough of most things. I'm looking at gold and silver saying, I almost hit my microphone, but I'm looking at gold and silver like, oh man. Anyway, I knew that people were going to start gobbling up these particular things. Some people are going to sell, I know, but some people are going to gobble them up. That's just how it is. They're going to buy a chunk. XRP's collapse from 98 cents yearly high has elicited concerns among investors. Why did they start off with that negativity? We already know what's going on. We know that. Let's skip down. Let's skip down here, man. Why do they do that? It's like they want to rain on. I don't find that interesting. Sentiment highlighted this growing pattern in a recent post. Believe me, we know people who are not happy as prices are going down. They make that very clear. Noting that XRP is among the few crypto assets witnessing an increase in whale activity despite a downward trajectory. Let's scroll here. It says, in a report, Sentiment confirmed that whale transactions on the XRP network have resumed amid the price drop. According to the report, these transactions do not necessarily indicate whale accumulation. Notably, the increase in whale activity could be due to purchases or sell-offs. All right, okay. Well, which one is it? Just specify. It says, however, it is doubtful that deep-pocketed addresses are dumping. That's what I'm saying. So, I mean, let me continue to read. It says, deep-pocketed addresses are dumping amid a 16.8% decline. Why would they sell at a loss? I don't understand that. So, I think that it would lean in a certain direction. Sentiment emphasized that these whales habitually accumulate more tokens when an asset plummets. So then why lead off with that other statement? I just don't understand that, but I don't proclaim to understand all things. Interestingly, this increased whale activity began on August 13th after a period of sustained inactivity. You mean as it became clear what was going on in the bond markets, when it became clear what the Fed might do because of all these different statements you made after it became clear what was going on with T-bills, right? I mean, come on now. And then look at the date of the FOMC meeting. It all lines up. Come on. These individuals are very intelligent. They know when to make a move. They're planning everything out step by step. At least it seems like that. As a result, XRP whale transactions worth at least $100,000 have surged to 22, a sentiment chart shows. In addition, the network has witnessed one whale transaction worth over $1 million. Says XRP outlook amid institutional interest. Moreover, insights provided by CRU analysts, a crypto platform focused on analysis, align with Sentiment's data. CRU analysis highlighted that XRP has continued to print higher lows on the weekly time frame since June 2022. I'm going to leave off right there. Let's move on to the next article here. What's going on with this website? Come on, load up now. Oh, here we go. Nice. Sometimes articles don't load up and I have to skip one. So this is also from the cryptobasic.com. Do these people sleep? I'm impressed with their hard work. I'm telling you right now. I don't know these people. I don't have a stake in their website or something. I don't know any of them. Never had contact with them. I just give credit where credit is due. I just want to put that out there because I'm praising them a lot. But it's because they've been doing a great job. Them, Finbold also. Finbold been doing a great job. My humble opinion. This is from cryptobasic.com and it's titled Top Cloud Payment Giant. It better be a real giant now. Don't get me excited now. Touts Ripple and XRP cross-border payment abilities. All right, let's scroll down, see what's going on. Volante Technologies. What? I'll take it. I mean, all right. Volante's a giant. Okay. Volante Technologies, a leading Silicon Valley cloud services. No disrespect, Volante. I'm just saying. Acknowledges Ripple and XRP's capacity to facilitate cross-border payments. They're a Ripple partner. Why would they not? Leading New Jersey-based cloud payment company Volante Technologies recently spotlighted Ripple and XRP as one of its latest reports. The firm acknowledged Ripple's ability to facilitate seamless, and that's important. That is so important. Cross-border payments using XRP. It's one of our greatest advantages. In the report, quote, is Fed now a CBDC? Wow, I understand why they have to clarify that. There's so much misinformation about Fed now. It's unbelievable. They really had people shook that Fed now was a CBDC. And I've been trying to clarify that and clear that up for a long time here. Let's continue on. Unquote. Volante Technologies highlighted the core differences between central bank digital currencies, the recently launched FedNow payment service, and traditional cryptocurrencies. The cloud payment giant highlighted traditional cryptocurrencies' advantages over CBDCs and letdowns. But let's put the letdowns to the side. The fact that we have advantages, that is where we need to continue to strengthen ourselves. Also continue to strengthen anything that might be weak. But but from what I've seen, there's very, very few weaknesses. And mostly it just comes from the backing of the traditional financial system. That's most of the weaknesses, right? It's just doubt and, there's an entire swath of the traditional financial system that's against us as far as regulations. That's some of the negatives that I've seen. So I don't really consider that negatives. We'll get over that. I believe so. So the cloud payment giant, let's see if we read that part. The cloud payment giant highlighted traditional cryptocurrencies' advantages over CBDCs and letdowns, calling attention to the capabilities of cryptocurrencies, Volante Technologies. But why are they doing this now? Why is Volante saying that now? You've been paying attention to what's going on in the world? So Volante Technologies cited Ripple's use of XRP to facilitate cross-border settlements. Volante Technologies touted Ripple as a, quote, real-time gross settlement system. Remember, we covered an article. I don't remember if that was a regular subscriber video. Maybe I shouldn't say anything. That might have been members-only video. Let me not say anything. I want to give that away. Hold on. Let's keep going. Forget I said anything. Ripple as a, quote, real-time gross settlement system, unquote. According to the report, Ripple has established a fully functional payment ecosystem spanning the globe. Now, I want to go back to what I was just saying. Members, you remember that video? You see why this is significant? Real-time gross settlement system. Seamless. You see how it's coming together? The report emphasized that XRP sits at the core of this ecosystem. While not explicitly mentioned, this description fits Ripple's on-demand liquidity product, which leverages XRP for efficient transnational payments. On-demand liquidity is a part of RippleNet, a global network of financial institutions for cross-border settlements. And who significant is Volante working with? You remember that? Because it's very significant that they're mentioning this in correlation with FedNow. Let's keep this in mind for later. But remember, we're building. The Bitcoin companies are still building. This is where they're starting. So we have to follow where it's leading up to, or else we won't know anything. We won't know why things are happening or not happening, or what could happen. So we're following the buildup. We're still at the base. We're building the base. You're going to put up some walls next, little roof. You get what I'm saying? You get the picture? Ripple's use of XRP for instant payments. The recent Volante Technologies article stressed that instant payment capabilities of cryptocurrencies such as XRP have presented fierce competition to central banks. These institutions are now developing CBDCs to keep up. They're not advanced in advance of us. They're trying to keep up with the growing trend. We could dominate. They don't want it to go there. We can dominate them. Don't forget, just in case you question what I'm saying. Oh, no, they can't dominate the banks. On Google, type in Christine Lagarde, and then something like cryptocurrencies could overtake central banks. Read that article. Yeah, read that article. From Christine Lagarde, the head of the ECB's own mouth, who used to be the head of the IMF. I don't have to say anymore. If they fear that crypto could take over the central banks and would render them useless, that's all that needs to be. Then that's all that needs to be said. So they can dominate them if we wanted to. It says notably, they're going to get into some countries utilizing. He says notably, 11 countries, including Nigeria and the Bahamas, have already launched their CBDC projects that we know. Let's move to the next article here. Want to get everything in a timely manner. I'm trying, folks. This is from CoinDesk.com and it's titled MasterCard Deepens Tie to CBDCs as Nations Mull Issuing Digital Currencies of all kinds. It says some of the first partners in a new MasterCard CBDC forum include Ripple, Fireblocks, and Consensus. I love that Consensus is still in there despite certain problems. And we did cover those about a year and a half ago. Payments giant MasterCard has created a forum where crypto industry players can discuss and collaborate on central bank digital currencies, injecting its influential voice into the CBDC conversation as nations around the world consider whether to digitize their money. They don't have a choice at this point. CBDCs are not cryptocurrencies, but some of them will benefit from the liquidity, rails, traceability, all types of things. Crypto would be the parts in the engine. CBDC is just a vehicle. It says they don't have to be. It says, but they're in the same family. They don't have to be, but they could be based on a blockchain, the ledger technology that powers Bitcoin and the rest of crypto. Even if they're not, will benefit because some of us are sitting on a ton of quant, and quant is going to move a CBDC no matter where it is. Quant connects the legacy financial system to the new financial system with no problems at all. So either way, it doesn't make a difference. We're going to, no, it's not financial advice. All right. Let me make that clear. My opinion, not financial advice. Either way, we can definitely make a ton of capital off of them if everything goes according to plan. In my humble opinion, all right, no guarantees. Got to make that clear. A CBDC would simply be a digital version of an existing fiat currency, like the US dollar, with the imprimatur of the issuing government. Well, it's a lot more than that because it has a lot more capabilities than the existing fiat currency. A lot more. That's why people have a big problem with CBDCs. Initial participants in the MasterCard's CBDC partner program include Ripple Fireblocks Consensus, the company announced Thursday. The program is designed to encourage conversations among key players in the industry and, quote, to drive innovation and efficiencies. MasterCard's, unquote. MasterCard's head of digital assets and blockchain, Raj Damodaran, said in a statement, quote, we believe in payment choice and the interoperability. Notice how they keep on honing in on interoperability, even though the legacy system doesn't have it. They don't have interoperability. Not at all. Read their documents. It's horrible what they're doing. But anyway, but we do have interoperability. That's the point. It says that interoperability across the different ways of making payments is an essential component of a flourishing economy. Well, in the future, definitely. You're going to need that interoperability. All the systems will be different. They'll be different. All of the small countries, big countries, small banks, big banks, they all want something different, but here's the common ground that they have. They want control. In order to have control, they have to have customized systems. Now, how do you bring it all together if everybody has customized systems? That's very different than what was in the past. Customization was so limited, you can't even consider that customization. You have to have interoperability where it doesn't matter what you're using. It just flows into the next system. Right? All right. So now let's move on here. Let's cover just a little bit of stellar news here. A little bit of stellar news. All right. Because I like what they did here. I like this technique. So this is from Stellar's from the other day. It says here, today we're excited to share the open source release of the Stellar disbursement platform. From paying gig workers anywhere in the world to delivering digital aid, anyone can power global payments using digital assets with this publicly available bulk disbursements tool. Over the last year, at Stellar.org has been heads down building this platform to make faster, cheaper, and transparent digital disbursements available to anyone. Last December, the Stellar disbursement platform was first used to power digital aid disbursements in Ukraine. Now, this turnkey payment solution is open source, available for anyone to use and build upon. I like this a lot. You already have these big money companies drooling over Stellar. You heard it from Wisdom Tree. You heard it from Franklin Templeton. And now Stellar's making it even easier, even more delicious for big companies to do whatever they want on Stellar. That's exactly what we want. We need more companies, more banks, more individuals building on Stellar. I like this for the future. I like this. So it says here, access the Stellar disbursement platform anywhere in the world to quickly send funds to thousands of recipients in seconds, monitor funds delivery in real time, power supplier payments, payroll. Now that's what I want. I want that payroll on Stellar. I'm interested to see what happens over the next 2 years. I am. That's personally how I feel. I want payroll rolling across Stellar. So we'll see who begins to build and use this. Payroll, contractor payments, and more. Keep pushing the Stellar. Keep pushing it. I mean, I can't tell you what to do, but you're going to need to push this so people will know, or else they won't know. Reach out to individuals and entities that can relay the information. It says, plus, there's nothing wrong with that. Plus, you can also tap into Stellar's extensive network of global on and off ramps. They're making this really delicious. In over 180 plus countries where recipients can convert their digital currency into cash. People are really underestimating Stellar. Some of these moves, and there's no telling how this is going to shake out. But some of these moves they're making could be huge in the future. Huge. We'll see how it goes, but I'm excited about this. So now let's move on here. We have more news to get to. So this article here is from coinpedia.org and it's titled Ripple CBDC Solution Attracts 90 nations paving the future for finance. I'm going to skip a little bit down here. I want to get to this James Wallace interview, this little segment here. It says, in a recent interview with Thinking Crypto, James Wallace, the vice president of central bank engagements at Ripple, opened up about the world of central bank digital currencies and how Ripple is shaping the future of digital currencies through its CBDC platform. Ripple CBDC platform is like the engine. They sound a lot like what I say. I kid you not. It weirds me out sometimes. It's like the engine behind digital money for central and commercial banks. We're going to start getting updates on those commercial banks soon. Not because of anyone issuing them, but I'm giving them like 2-3 months before I start calling around. I'm dead serious. We used to do that in the beginning of the channel. I usually do that just low key, but yeah, I'm giving 2-3 months before I start getting a little antsy, and I'm going to start calling around and trying to find things out. That's just what I do. He said that it is a whole system that covers everything from producing new digital currency to ensuring that individuals can spend it. Consider it the whole life cycle of digital money, from birth through purchase. This platform makes the journey easier and more efficient for everyone involved. He added, quote, I think the trend is very positive. There's something interesting he's going to say here. I mean, obviously, there are pluses and minuses, Different countries have different things going on. This is what I was saying before. Look how he's trying to be so obtuse and opaque. That means they want different systems because of their different economic needs, right? Some countries want to control everything. Some don't mind. They just want easeability, which means they need interoperability. It says distractions at different times. Now, why did he add that? Because there's a lot of geopolitical things going on that have either sped up the processes or have slowed things down. Understandably so. It says, but generally, I think the trend is forward. So they've been making progress. I think the biggest trend that I've seen is from what you might call the sort of traditional finance world. Really? This is what you're seeing. Tell us. So not only giants like BlackRock getting involved, but also, commercial banks too. Well, we know Ripple is close with the banks. Commercial banks. See, we've been concentrating on central banks so long. I've been trying to bring up commercial banks for a long time, but now they're admitting to going after. They're attempting to go after a huge swath of commercial bank, U.S. commercial banks. This is what they claim. We'll see how that works out. Who knows? But why mention BlackRock? Why mention BlackRock, Mr. James Wallace? Why throw them out there? Now listen, maybe it's nothing. It could be absolutely nothing. But when you have an individual like this, they don't just drop a company's name just because. They don't. I'm telling you, they don't. I know this from when I was young. I was making a lot of moves, and when I was young, I was doing a lot of interesting things. I'll say that. And I'm trying to say a lot with saying a little. And anytime somebody drops somebody's name, I kid you not, month or two later, they were working with those people. Year later, they're making deals. They're working with those people. This is just my humble experience. I worked in a couple of industries. It was interesting. So then why? I don't need to say that too many times, but let's keep our eye on that. We know BlackRock. BlackRock already is getting a taste of crypto because they're involved with Circle. Circle has links to Stellar, obviously, right? Now, XRP is the only digital asset with regulatory clarity as of now. Why would BlackRock not be interested in XRP? Do you think they didn't just simply call just to ask some questions? They can ask questions. BlackRock, Vanguard, Blackstone, who's been going nuts when it comes to real estate, by the way. Blackstone, people just forgot about Blackstone. Blackstone was like, oh, you want to forget about us? Oh, watch what we do. Buy up all that real estate. Anyway, I have so many thoughts. It's going to be interesting to see what they do with that real estate, though. Anyway, says the vice president also noted a growing interest in stable coins, which are just CBDCs, and tokenized assets such as real estate and bonds. Now, that's interesting. This trend he mentioned reflects maturation of the market and broader recognition of the value these assets bring. All right, so we're moving on here. So this article here is from Bloomberg.com, and it is titled, Americans have almost depleted excess savings. I said it, didn't I? I told you. And that's just from what I was hearing and reading from other articles. Let's read this one here. It says excess savings U.S. households built up during the redacted will probably be exhausted in the current quarter. I'm going to go out on a limb, just my humble opinion from what I've heard from people on the ground, that their savings is already gone. But okay. This is according to research from the Federal Reserve Bank of San Francisco. removing a key support for consumer spending. This is another reason that supports what I was saying before from articles that I read, that most U.S. citizens were living off of credit. They were maxing out their credit. That's why consumer spending has looked good, because people want to continue to maintain their lifestyles for as long as possible. Sure, they cut other things, but it's, spending wise, as long as that credit was there. I mean, you're going to see some changes coming up very soon, dramatically. But let's continue on here. Removing a key support for consumer spending that has boosted the U.S. economy this year. So what happens when they can't do this anymore? There's no more savings. There's no more credit to spend. Then what happens? That boost goes away. It says, quote, our updated estimates suggest that households held less than $190 billion of aggregate excess savings by June, unquote. That's mind blowing. San Francisco Fed researchers Hamza Abdelrahman and Luis Oliveira said in a blog post published Wednesday on the bank's site. So once this also plays into, obviously, when you look at the M2 historical money chart, what did it say was coming? So now you have the Fed delivering this information. Are the people going to hear this? Are they going to pay attention to this? We'll see. So I got to get to making the members only video now. Appreciate every single one of you. I'll see you over there. Now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.